Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at Everything You Need to Know in 90 seconds at 9 o'clock. With news, markets have been moved by the US Federal Reserve Chairman Powell's testimony to Congress, and was a bit more hawkish than they were expecting. The 2-10 US bond yield curve hit minus 100 basis points for the first time since 1981. But first, the overnight dairy auction was a lame affair. Overall prices were down 0.7% in US dollar terms, but given the shifts lower in our currency, they were up 0.7% in New Zealand dollar terms. None of the components lifted in the way expected, so this event has been a disappointment. In Washington, D.C., Powell told the US Congress the Fed is prepared to increase the pace of rate hikes because the data shows a stronger American economy that has been unresponsive to the rate hikes so far. He signalled that rate hikes will probably go higher than they've previously indicated. While he was speaking, the retail data for last week came in and it was unusually weak, up only 3% from a year ago levels on a same-store basis, and that's far less than inflation. In fact, it was the weakest rise since late 2021. Perhaps reflecting the lower mood, US logistics LMI eased back a bit in February too, still expanding, but not by as much. Across the Pacific, Chinese exports fell sharply, down 6.8% from year-ago levels in February, but this was less than the January fall of 9.9% and also less than anticipated. But despite beating estimates, it is a grim reminder of the global pullback in trade. Chinese imports fell a stunning 10.2%, and much more than expected or in January. Australian exports rose marginally in January from December, which was an improvement over the prior month's slip, but imports rose by much more, which shrank their enormous trade surplus somewhat. But the key Aussie news was the RBA's 25 basis point rate hike and the hawkish commentary from them. Some interpreted the statement to suggest they are nearing the end of these hikes, but that is a wishful interpretation, I think. The weakening of global trade is also evidenced by the January air cargo data. A 2022 impetus has leaked away starting in 2023 and a worrying trend. The US Treasury 10-year yield starts today at 3.96% and a net 2 basis points lower than yesterday. And the price of gold will open today at $1,821 an ounce. That's down $30 from yesterday. And oil prices start today down $2. It's just under $78 a barrel in the US, while the international Brent price is $83.50 a barrel. And the Kiwi dollar is down 0.5 cent again, now at 61.3 US cents and dragged lower by the Aussie dollar. But against the Aussie dollar, we're up a full 1 cent at 92.9 Australian cents. Against the euro, we're little change to 58 euro cents. That all leaves our trade-weighted index at 70.2 and also a little change from yesterday. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.